The strikes between the United States, Israel, and Iran are dominating the headlines. But the real battle is happening in the global markets. While the world watches the missiles, the elite are watching the price of crude oil and the silent collapse of purchasing power. In 2026, geopolitical instability is no longer just a news story. It is the ultimate economic trigger. At Capital Blueprint HQ, we don't just report on the conflict. We decode the financial architecture behind it. If you have assets in the market, or if you're still relying on a single fiat currency, the next 72 hours are the most critical of the year. The economic reset is no longer theory, it is here. Monday morning has arrived, and the global markets are in a state of absolute shock. As the opening bell rang across Wall Street today, March 2nd, the reality of the weekend strikes finally hit home. We are witnessing what many are calling the Monday market meltdown of 2026. This isn't just a typical red day on the charts. It is a fundamental repricing of global risk. Let's look at the damage. As we speak, US stock futures have taken a nosedive, with the Dow Jones dropping over 500 points at the open. Tech giants like Apple and Nvidia are bleeding, down between 3 and 5% as investors flee from high-risk growth stocks. But the real explosion is happening in the energy sector. Crude oil prices didn't just rise, they gapped up by over 8%. Brent crude is now surging toward $80 a barrel, driven by the nightmare scenario every trader feared: the effective closure of the Strait of Hormuz. With over 150 oil tankers currently anchored and afraid to transit, the global energy supply chain is paralyzed. However, while the traditional stock market is in a tailspin, a different story is unfolding in the world of hard assets. Gold has officially shattered records today, hitting an all-time high of $5,300 per ounce. This is a massive 24% gain in 2026 alone. Central banks and institutional elite are no longer just hedging. They are seeking total shelter in physical scarcity. And then there is Bitcoin. Despite the chaos, Bitcoin is showing a fascinating level of resilience. While tech stocks are being liquidated, the digital safe haven is holding its ground in the mid-65,000 range. We are watching the early stages of a historic decoupling, where decentralized assets are being treated as a digital fortress against a collapsing, debt-based system. But remember the golden rule of Capital Blueprint HQ. In every crisis, wealth is not destroyed, it is simply transferred. The money leaving your favorite tech stocks is flowing directly into defense contractors, domestic energy producers, and gold miners. The masses are selling in a blind panic, but the elite are using this volatility to rebalance their portfolios into the moats of survival. This is the inflation bomb we warned you about. Higher oil prices will flow directly into the cost of your groceries, your travel, and your lifestyle. If you are holding nothing but cash today, your purchasing power is the primary casualty of this war. Stay calm, do not trade on raw emotion. Audit your hedges and look for the massive opportunities this volatility is creating. We are monitoring the charts in real time and will bring you a full sector analysis by the closing bell. This is Capital Blueprint HQ. Subscribe now to navigate the chaos of 2026. Stay focused, stay prepared. The shift is here.